Hey guys, Mike here. So we got another big week coming up, and we had a lot of data drop on Friday, which I'm going to show you. So if you keep saying, well, where is this recession at? When's it coming? All that fun stuff. I'll show you why that is not coming right now. And also, again, market feels frothy, but I'll show you some data that says, not really. And I'll show you why. I mean, you just got to look at this stuff. I know it feels that way for sure. And I think a lot of it has to do, again, with the crypto market and small caps that were going crazy and nuts and producing, 300-400% in 2 weeks or whatever it was. We'll also get into Tesla big day, another stock that's probably going to be out the gates like crazy on Monday because of some news that came up. And I'll also show you what I'm looking at on the Q, especially the futures, and something to be very nice to see next week before we get into like the 19th and really start moving into FOMC week and all that fun stuff. But when you look here, you can plainly see, again, average hourly earnings. They went up, right, about 4%. And when you really look at this, more important, I always tell you to look back. Like, what is norm? We're still above norm right now. Okay, this was 2018, 2019. You see 2010, 2018 was even, or 2017 was even lower than that. But we're getting back to what was normal around 2007, 2009, somewhere in there. And so we still hadn't reached that level yet. Unemployment rate still holding up, however they're calculating that is. And the funny thing about this chart, though, you can see right there, is I always say, look, you can pull up a long-term chart of the unemployment rate and show you how backwards things are right now. When you look at 2010 and 2019, when we went on one of the best bull runs ever, what was the unemployment rate doing? It's going down. You pull up a long-term chart, the unemployment rate going many years back. This is what you'll see. So if you pull the stock market over it versus now, what are you seeing? Unemployment rate is going up, curving up, right? It's kind of, steady where it is now. But what we're supposed to believe is, usually what you'll see is once this curve starts to move up, it'll continue to go up. And somehow the stock market continues to go up. And so how high can this thing get before the stock market's finally had enough? So it's just totally backwards right now. Again, 4.2 is historically low, okay? So probably 4.7 to 5, somewhere in there would be my guess if we get there. Now, I'm looking over here at, obviously, non-farm payroll is always a big one. Still going up. Right, looks like it's kind of flattening out, but it's still going up. You can see the numbers at the bottom. Again, go back to 2018, 2019. Look at those numbers every month right there, and look what we're at now. Okay, so really normalized. Whether you believe the numbers or not, we'll have to see. They actually revised the numbers up for the last couple months. Now, talking about frothiness in the market, the one thing I look at here is actually since November 13th, like the bullishness has actually been going down, and the bearishness has been going up on some of these readings. When you go over and see what's going on with breadth, you can see right here in the S&P, well, I mean, 57% of stocks above their 50-day moving average. That's not a whole lot. Usually you get up there between like 75, 80. That is frothy. That's when we get those pullbacks. But here, it's a lot different. You go over to the Nasdaq, which where money's been rotating into, which I'll show you, of course, and you can plainly see there. So this is another one, sitting around 61. Normally, again, you get up to 78, 80, getting a nice pullback. All right, that's just how it works. But right now, because we're getting so concentrated, which I'll show you in certain sectors and in tech, that's why you're not seeing that crazy amount of frothy, right? And again, I mean, this looks like a wedge. I mean, we'll see which way it's going to go, obviously. And I think everybody would love to see some kind of pullback for sure before you start getting this really like Santa Claus rally going. And maybe it's already started. We'll see. But when you look over here and see what I'm talking about, where money's been going, you can plainly see, look at the sectors. This was back in November today, and you can see everything was green except XLV, right? And then you start moving forward and you'll see a shift going up. And so if we look at like maybe right past Thanksgiving, you can see very clearly the Mag 7, XLY, which is discretionary, stuff we don't need, big tech moving up, and then everything else went basically red or flat. Okay, XLE is still just hot garbage right now, but you can see a big shift in where money just kind of started flowing into. And then when you come over here and look at Mag 7, software, communications, cyber, fintech, you can see going back in November, all these software, fintech was going to the moon, all that fun stuff. We shift forward, and now it's the Mag 7 going up. Fintech went basically kind of flat. Cyber, but then it's going to be communications, and software still having a good time, okay? And so that's really where it's getting concentrated into those areas. And when we pull up the Qs here, you can see we're almost at the top of this trend line, which we've hit 4 times. This is going back to September right here. We are not quite there. And so when you're looking anywhere from 527.61 to around 529 to see if this is going to continue to grind up this week, or you finally get a break, maybe come back down test or fill that gap right down below us right there, which would also put us around 515.75 if I'm not mistaken. So I'll mark that one out. If we do happen to get some kind of pullback, which of course to get it, you're going to need the Mag 7 or Mag 8 really, if you include Avgo, which I'm going to go over with you, to actually cool off this week. And Avgo's looking pretty dang good, as I'll show you the chart and stuff. But if we pull another trend line down here, really you're just kind of in this channel. You know, if we start pulling this one up right here. So if we do get a pullback, so we've been bouncing, I guess November we came down the bottom of it, December we came down the bottom of it. So, you know, if we do get a pullback, that would put us back down right at 0.79 fib, I guess, for a bounce if we got one. But again, I'm not expecting this to get back, maybe to fill that gap or something. But besides that, you know, we'll see. What I would like to see, as I told members for sure, is this right here next week. You know, I doubt we get it, but if we did, it'd be awesome, is to come down to one of these shaded areas on NQ, which means the Qs are dropping, of course, as a futures chart, or into the next shade area, which would be a huge discount. So the first shade area gives us a 0.5 discount. This one will give us a 0.7 now, which a lot of people will flow in at that point in time into the market and start pushing this thing up to have a really, really big year-end rally. So again, you know, 3 up, and then hopefully maybe we get 3 down. We'll have to find out. We'll see, but that's what I'd like to see at least. You look at Tesla again, huge day. We said this thing was like it was flagging, just absolutely exploded. I thought, you know, 385 for sure, but man, this thing, I guess it was around maybe 2 o'clock in the afternoon, just got pushed up all the way to 395. Okay, 395. So we made it way past any of those fibs that we have marked out there. And so almost to 400. And like I talked about last week, I said, hey, don't be surprised, right? Now the big question is going to be, 400 is a huge psychological level. I'll show you what I'm talking about on this one. So if it decides it's going to push more come Monday, because in after hours, again, this they pushes up. You don't see this on your chart unless you put extended hours on this, right? Because this is regular hours, but extended hours got us up to 395. Where we'll open up Monday, we'll find out, obviously. But when we pull up and go back and look, you can see 400, if we get there, it's been a beast for it to actually get through. And you can see right here playing this day, and we go back, 1, 2, 3 rejections off of that 400 area. So we'll see if sellers are sitting there or not. Again, at this point in time, I'm not even going to be surprised if they push it right through up to 415. But you would think sellers would be sitting there. But we'll have to see, because when we go back and look, like I say, the $300 level, you can see one main rejection, but they wicked us above, right, to go above 300 between like 310, 311. So again, what rejected this one wasn't just a 300, it was a trend line coming down. In this case, there's not a trend line going to be coming down. So not going to be surprised, but 400 is definitely going to be a key level to watch, because it has been an enormous move, guys. And if you're looking at maybe a top level right here, and when you look at this right here, I have the top marked out, but this is a bowl shape, right? So when you get this rounding bottom, you draw a straight line across, it's going to be super ugly. You measure top to bottom, and then you draw it on here. I already measured it out. So it's going to be around, I think it's 428 is actually that measurement. So just watch 428 at some point in time. I don't expect it this week, but sometime this year, you never know. Looking over here, Avgo is another one. We've seen this move play out many times, where it's just setting higher lows, but it's not getting higher highs right now. So if you get up to 185.67, expect this thing to absolutely explode higher. They do got earnings this week, and when you look at the fibs, if it does go, which I mean every one of them seem to be playing out this way, you can see right here, we're going to draw this down to 1.272 is going to end up being the first level really, and that's going to be right at the 200 mark. Okay, good psychological level, 213, 220 is after that. And again, they got earnings, so not going to be surprised to see this one explode higher. SMH, of course, is what helped that, because Avgo has a nice little weighting in this one. You can see it just wedging right now. So see if this one moves higher into that shaded area between 265, 270. Again, if whatever Avgo gets destroyed and starts selling down around 217 is where you're probably going to see SMH move. A lot of it also would depend on NVIDIA, because NVIDIA is a very heavy weight in SMH, unlike with SOX, SOXX. This one has, I think it's Taiwan Semiconductors, NVIDIA, the two biggest one, but Avgo is one of the heaviest one too, if I'm not mistaken. Speaking of semiconductors, you guys asked about Super Micro, and this is one of the ones I'm talking about. Exploding Friday, because guess what? They got an extension from the Nasdaq to get their numbers in. So they still don't have the numbers done. The auditors still got to do it. But in this market, that's all you need is an extension. And if you take all the way to February, you know something's wrong with those books, by the way. Let's be real about that. But again, we already talked about this one. News is what drives it. Anything. And you can see this is a weekly chart right here. So they want probably Monday, we're going to push above the 50 mark on the RSI, get the bullish MACD cross on the weekly. And so that is bullish for this one. And when you come over here to the daily, where is it going to? Well, obviously it's going to fill that gap probably Monday morning. It might even gap up out of the gap. But the big thing you want to look for, and I'm just going to get rid of all this because we're above the zero line of MACD, where RSI looks good, stochastic, all that fun stuff. But when you look at it, it's going to be this trend line right here between 53 to 57, somewhere in there. That was resistance for 3 months. It was support for 3 months in the past. So you need another flip of this right here. And so with this one, this whole pump has been nothing but news of, hey, we got new auditors. Hey, we got extensions, right? They still have not done anything to stay on the Nasdaq, all that fun stuff. Remember, it's been months, by the way, with these books. So it'll be fun to say. This is going to be one of those ones where you make a boatload of money or the rug gets pulled so hard on you because it comes out that they got to redo a bunch of stuff on their books. Well, it's going to be fun to watch. But so far, it's been moving like crazy, so people have been enjoying the ride. And I expect they'll probably hit that trend line this week if this momentum just continues to push like crazy. Now, IWM still flagging right here, getting wedged. And so I cannot see it breaking this trend line right here. And so don't be surprised if this one has a nice breakout. Right now, it's just mitigating this daily fair value gap. It's not bad. I mean, to be honest, I'm going to mark this right here. So it'd be nice to fill that, hit that trend line at the bottom, shoot up, break out. And then, of course, what you're going to have is 245 is going to be resistance if it does decide to break. Maybe get a discount. This continues to come down. But you got to watch these quantum stocks and all these other stocks have been just moving like crazy. They're starting to move back up again. If they start to squeeze again, then IWM will finally catch a bid. Right now, it's just all about big tech. Right now, earnings have a bunch more this week. C3AI is after. That'll be a high flyer. I think they're expecting a $7 move on that one. Oracle, MongoDB, Toll Brothers, the house builder, of course. And then Tuesday, you end up with AutoZone, Academy Sports, Ollie's. See, GameStop's a big one. It's kind of been on the move. Stitch Fix, Dave and Buster's right there. Come over to Wednesday, Macy's somehow still in business right there. Adobe will be a big one. And then you end up with Lovesac. And then the big one is Broadcom after the bell on Thursday, Costco, and RH. And then when it comes to your data, you only have to worry about 2 days next week. It's going to be Wednesday, Thursday. Wednesday, core CPI, and then CPI month over month, year over year, 10-year bond auction, crude oil inventories. Thursday, core PPI, PPI month over month, unemployment claims, and then a 30-year bond auction, which has not been a problem so far. So hopefully you got something out of that. Please hit that like and subscribe button if you did. I'm going to go watch my Chicago Bears hopefully beat the San Francisco 49ers. We will have to see. Think about signing up for the membership if you want to, unless the McDonald's combo right there. And that's everything you get with it. And I'll see you guys tomorrow.